All right, you guys. So I've got the recording going here. So the first thing I wanted to do is bring up just a couple of market items. What's going on with overall indexes? What's going on with sectors? What's going on with all these different things? There's lots of noise in the market right now. I'm only going to spend just a quick second on that, and the reason being is there's a couple of things that I want to start training our brains on, and that's a simple system that we're going to start following on a weekly basis to find opportunities. Because most of the people on here, most people everywhere, are committed to other things in their life. So they're not sitting in front of a computer all day being able to make executions on trades. That being said, we can't follow systems that require us to do that. So I'm going to go over start to go over some things that will help us in finding those opportunities that allow us the freedom of not being glued to the computer all day. So this is going to be a process. So first things first, let's take a look at just the market really quick. Do a little market overview. We are pushing through these highs, you guys, but we're going slow. It's a little stagnant. Why is that? Holidays. That's the biggest thing. I can tell you right now, COVID is definitely still a concern, but I'm speaking to a friend of mine, and his wife got COVID, and the first thing that came out of his mouth before I can say, "Oh, I'm sorry to hear that," was, "So that means I'm stuck with my kids at home because we all had to quarantine." So um, obviously he's more concerned about being stuck with his kids at home for the next 14 days than he is his family having COVID, which I think is just the public sentiment right now. It's a nuisance more than a concern. I still think it's very much a concern, and I'm sure he does too. But in reality, we're all kind of like, oh crap, I hope I don't get it because then I'll be stuck in the house. Not, I hope I don't get it because I'll be sick. So the market's reflecting that. It's pushing through these highs. We can see it right here. We're now crossing over this threshold, making higher highs every day. Let's take a look at the NASDAQ. Punch through this neckline right here and cruising on up. The Russell is the biggest one, though. This has gone beyond this high on January 17th of 2020. Way back here, you can see where that high was right there. It punched through that back in November, the 9th of November, and it is steadily cruising through it. It's gone through two of our extended Fibonacci levels, okay? It's gone through two of them, the 38 1.38% level and the 1.61% level. And we are beyond that previous high in January by almost 9%. Huge run. So what does that mean for the overall market? We're looking really good, even though these other major indexes are lagging a little bit behind the Russell. They're also, everything's kind of coming together. That doesn't mean that we should just jump all in, though, because there's still a lot of things that are presenting themselves as hurdles, and we're going to talk about what it is that is the hurdle that I'm seeing specifically. The markets are not acting in a way that is favorable to buying right now. Typically, when markets are going up, volatility is good for certain option strategies. But overall, when you have the market going up and volatility down when it's low, it should be represented in the spreads being narrow. Well, they're not, and we're going to look at that. But let's take a look at the VIX really quick. It's holding strong on this 21 level right here. Has not really busted through it. So that's an indicator that volatility is still holding some kind of strength, just a little. Obviously, we're still pushing through, but it's volatility is still a indicator there. All of these different things on the chart is one of the things I'm going to talk about today. So that's just a quick market update. Let's take a look at the dollar really quick. Look at it go, just pushing right through those support levels, and everything is following suit in our Forex pairs. I'm so glad that you guys finally got your Oanda platforms up, because there is big trades on the horizon. Saw true. It wouldn't download on my Mac. What would not download? Okay, while you're answering that, I'm going to bring up a couple of Forex pairs here. Okay, so the euro dollar is basically mirroring what's happening on the dollar index. It is busting through these highs right here, and it's going straight up. It's getting a little exhausted. You can tell. These are some big moves. Let's switch my template to our Forex template here. Okay, so it's getting a little exhausted, and it's leaving some pivot points behind, some big ones. Okay, this is a monthly pivot point right here. So when you see a monthly pivot point being left behind by how much? By 300 pips, that's substantial. Okay, so we need to keep that in mind, that even though the index is moving on forward, the dollar index, these things don't typically like to leave these pivots so far behind. Now it did right here. You can see right here. Let's take a look at this previous price action. This is back in May. This is the euro dollar back in May. It broke this resistance level, very much like it's doing right now, okay? And it just chugged on through, but it left this monthly pivot point behind, okay? And so normally we look for these things to retrace back and hit them, but it doesn't have to. And obviously you can see it has not come back. But the further it gets away from it, the more we can expect some kind of retracement. Maybe not 100% retracement back to the level, but some kind. So from that resistance level, from that pivot point being drawn, it rose about 350, 400 pips, okay? It came all the way back down to a little under half. So retraced probably roughly 40% of it, that movement. So that being said, we can probably see some kind of scenario happening with that here. It can continue going higher. So I'm not going to be looking for a sell on this yet. What I'm going to be looking for is this to potentially keep moving up, and then to come maybe back down to, say, this this resistance level right there. Now resistance becoming support. Okay, so maybe back down to this level right here. So we'll keep an eye on that. We'll be looking for some buying opportunities there. You were referring to the MetaTrader 4. Yeah, so I sent a video out, you guys, on Telegram. And again, I know some of you have been looking at Telegram on your phone. It is available on a browser on Mac, and it's just a browser. It's just a web domain. So definitely be bringing that up on your computer, on your Mac or your PC. Watch the video. It's a little over 10 minutes. It's specifically for people with Macs. I use a Mac and a PC. I do a lot of my trading on a PC though. So I have a fix for being able to place trades, Forex trades. And we're going to look at that right now. It's in the video, so I'm not going to spend a lot of time here, but this is FX Trade. Okay. This is how we're going to place our positions. We're not going to do any analyzation on this platform whatsoever, but I like it. It's very easy to read. Here's my pending orders. Okay, here's my live trade. I'm up $61 on this trade right here, so it shows me that in profit. When you're in a loss, it'll be red. So that's Black Friday, right? Black, right? It tells me what type of position I'm in. Am I short? Am I long? It tells me what currency pair, how many units, etc. All this is in the video, but I wanted to do a quick reference to this because we were just looking at the euro dollar. This is probably a pair that we're going to be looking at soon. Okay, so I want to make sure that you guys all know how to use this, make sure that it's funded, so that when we're ready, we can execute. And again, in the video, but this is how we place our orders. And once we place them, we don't need to look at this anymore because we still check all of our charts. We still look at all of our price action, what's going on here in TradingView. We can set our alerts here, et cetera, et cetera. Now, if you guys could please all open up TradingView. What we're going to talk about today is how we put together our analysis and how we look for opportunities with a quick scan. So maybe we find 10, 20, 30, 50, 100 stocks that maybe we're interested in, right? Well, we don't want to spend hours and hours analyzing them. So what's a quick way for me to run through 100 stocks? And the quick way to do that is to use our indicators, okay? Our technical indicators. So if you all have TradingView up, I sent you guys a Black Friday link. I hope you took advantage of that. If you're using the free version, you won't be able to do a lot. You won't be able to put on as many indicators as I'm about to show you. So if that's the case, just follow along anyways. So this set right here is our Forex set. I've talked about this several times, and I just went through how we use it, our pivot points. So I want you to build this really quick. So how we do it is we select indicators right here, and then we type in pivot. And then it'll pop up right over here, okay? Pivot points, high, low, pivot points, standard. You can see all that. We're going to select pivot points standard, okay? And then once you do that, it'll pop up over here. Now, the settings will be completely different than mine. So what you do is you click on this gear, and right now the inputs on this are traditional, show historical points, and my time frame is weekly. You can see that there, weekly, okay? Number of pivot points back, I'm going back 100. You don't really need any more than that. Then we go to style. Yours is probably a different color. It's probably a different thickness. Change all that to however you want. But this is what we need. We need the pivot point here and the inputs there. If you're not able to follow along with this right now, no problem. I'm recording this so you can go back. So that's how we do pivot points. Now you want to add another pivot point, same exact process. You type it in, you click pivot point standard, and then go through the same thing. There it is right here. We change it to monthly, okay? And I only have 25 on there, and that's all I need. And then I change it to my color, whatever I want, etc. Now we've got the two pivot points that are most important to us. Final indicator that we're putting on for our Forex charting is moving average exponential. So we'll just type in moving, and then you can see that these pop up. The built-ins is moving average, exponential, weighted, smooth, etc. We're going to use exponential. If you click on that, The settings will most likely be completely different. Of course, you can change your colors, your thick, the width of the line, blah, blah, blah. The most important thing here is 200. We're going to use 200. Okay. And voila. Now we want to save it. So save indicator template and then name it whatever you want. I called it EMA plus PP. Okay. So that is how this is going to be our template for looking at Forex. And these are things that you want to be able to toggle through. So now let's switch over to stocks. So let's just type in SPX. Okay. Now what we're going to do is we're going to clear all these. So there's a little X here. You can remove the EMA, the pivot, et cetera, et cetera. Get rid of everything. So then you have a clean slate. So I'll do it too. All right. Now we're going to build, we are going to build where did it go? Well, shoot, I think the one that I just had up was not saved. So make sure you save these things, otherwise they'll be gone. As soon as you toggle over to a different template, whatever you had there is gone. That's fine because I'm gonna build it right now. So what I'm gonna do is I'm going to go into indicators. The indicators we have up, one of them we already had on the last one, moving average exponential. Put that in there. And then the other one is just moving average smooth. Okay, so we're going to select that one. You'll see those two indicators up there. Now we want one more. That's moving average smooth again. So we're going to have two. Okay. This one is different. Okay, well, I'm going to close that out. So we want two smooth moving averages. Okay, so moving average. Smooth. Okay, so their default settings, you can already see, is 7. We want to change this to 30. And I will change my style here to a little bit thicker so I can see it. There's 1. And then the other one, we're changing to 50. Change my style here so it's a little thicker. You can change the color later if you want. Okay. So these are my 3 moving averages that I'm going to use to find trend. Now, these are lagging indicators, meaning they're just an average of price over a particular number of days. In this case, 30, 50, 200, right? So they lag what actually is happening in price. But it's a quick way for us to get a glance at what's going on, and we use it for signals too. So I'll bring that up as well. So there's the 3 indicators, and one more. This guy right here, MACD. Okay, and all you do is type in MACD. That's it. Click on MACD. Okay, it'll come up there. I'm going to go ahead and delete it. So I just want to make sure you guys can see. Then we're going to select settings. Our inputs are fast length 8, slow length 17, and signal smoothing 9. Okay, and then you can change the styles and all that later. Okay, so now we've got our indicators present. We've got them all pulled up. So great. You know how to use them now. We can go ahead and make a ton of money, right? Wrong, right? How do we use these things? So when I look at all of this stuff, especially when I first started, it looks like Christmas on a screen. I was the guy I was first started watching. He was brilliant. But I thought he let his child draw all over his computer. That's what it looked like. It looked like Christmas lights because he had so many colors. I was just thinking, gosh, this guy, his eyes just, I mean, I don't know. I thought it was high. So, but what we're looking at is indicators to tell us, like I said, trend development, and indications to tell us whether or not we're going to see a shift. We're going to see a break in trend, maybe a signal to sell, maybe a signal to buy, things like that. So save this template. Okay, same thing. Go ahead and save it. And now that we have those saved, how can we blow through 100 stocks? How do we do that really quickly? So I've got a list of all the stocks that we have been looking at over the past several weeks. So why don't we just go through that really quick? Let's see if we can do that in the next 5 minutes. IIPR, that was a trade that we were in. And I actually mentioned this in our last session, I think. I did. I mentioned this trade in our last session, and I brought it up saying that it was in profit about 70% roughly, that option. And but it had like 12 days to go before expiration. And I think it was, yeah, we sold the 136.50 put and bought the 135.50 put. Well, there's a lot that can happen between here and there, right? And I mentioned that. And if we get a breakout, this could easily come all the way back down by just simply looking at this wedge pattern, measuring it, finding out from the bottom to the top of this wedge is $19. And from this breakout period right here to our entry level puts us beyond our spread. So between the next 10-ish days, whatever's left on expiration, there's a pretty high probability that it could come back down to this level. And if it goes a quarter below 136.50, we're losing money. It's got to stay above 136.50, our short put. It's got to. Otherwise, we're losing money, right? So at the time before this breakout happened, I was up 70% of my 100% max profit. And I closed it because I wasn't willing to risk. I'm perfectly fine taking that 70% and not risking losing the entire trade, which this could easily happen in the next 10 days, right? So enough of that. Blowing through these trades, starting now. If I simply look at these indicators, looking at these moving averages, what is the first thing that I see here is they're all moving in an uptrending fashion. So if I'm looking to find out whether or not this is uptrending, I look at these three moving averages. Sure is. I look at my MACD, divergence. I can see right here that this MACD right down here crossed right. Let's see. If you look down at the parameters down the left-hand corner, you'll see that the blue line was at 5.83, and the red line, orange red line, was at 5.75. So at the time, it was above it, meaning bullish. And right there, the next day, it crossed. So now the red line is above it. That's a bearish indicator or a sell signal, okay? So right there, I have a divergence, meaning this indicator is representing that price is diverging from what there's a potential reversal in trend coming, okay? That's what that means, is a divergence in this indicator means that that we have a difference in what's happening in the chart and price versus what's happening in the indicator, okay? So you can see it right here. At the time, you couldn't really tell, but then you definitely see it right there on November 27th when it breaks out of our pattern right here, breaks out, and then makes a lower high. So let's draw this out really quick. we can see that it's very clearly a high right here and a lower high right there. So now we're falling in line with what's happening with this. So I'm not bullish at all on this anymore. So that's why I look at this. That's why I have the 3, because if I just had the moving averages, hey, it's above the moving averages. They're trending up. Cool, we're good to go. Wrong. We got to look at this to make sure that this is also replicating what we're seeing in the moving averages. Okay, I'm not doing very good with going through all these stocks in 5 minutes. So I'm going to pick it up a little bit. All right. We are above our 2 moving averages, but we're below our 200 moving average. So I can look at this and I can say, all right, according to my moving averages, we are bullish in the short term because these are 30 and 50 days, right? So shorter term. Longer term, we're still bearish. But let's take a look at our MACD. It's crossed bullish. So I'm looking at this and I'm thinking, okay, I think we have a bullish opportunity and I'm making higher highs, short-term higher highs, but I am making it. You can see it right here. There's one higher high, higher high, higher high, lower high, but that was a spike because of, unforeseen circumstances, blah, blah, blah. So there's that one. I'm looking at this. I'm saying, you know what? I see a bullish opportunity on this. I'm going to put this down as a stock that I might look at buying. Okay. Here we go. We're moving right through it. All right. Got my 2 moving averages. I'm above both of them. David, this one's for you. I know this is stock that you have on your radar. So I'm looking for stocks that I can predominantly buy with options, but that doesn't mean that I won't also look at this for holding the stock, right? We made a high, but we made a lower high. Okay. So a quick look at this tells me that I'm not going to be interested in buying this yet, because even though we're above these 2 moving averages, and even though I have a cross in this MACD, those are all bullish signs to buy. I've got a lower high, and that is not bullish. So I need to see this guy move above here before I can do anything. And that could be an opportunity coming up real soon. Okay, let's move right through. We got love. This one, it's very obvious this is bullish, mostly because we've been following it a lot. But just going right through, pretending that we haven't done any analysis on any of these charts, right? We have a cross in all 3 moving averages. The 200 crossed right there with the 30, and it looks like it's about to cross with the 50 right here. So we'll see. But overall, we're very much bullish. We're above all 3 moving averages, happened right there on November 5th, and we've been steadily moving above it. And we'll be looking for maybe a little bit of a move down here to continue this nice trend, because we like nice trends. We want to see highs and lows. So we've got a higher high, higher low, higher high, higher low, higher high, higher low. We'll see what happens here. Even if it comes down, I still wouldn't think that this is bearish, because overall I'm seeing a nice uptrend. But look at my MACD. I've crossed right there. You can see right there that it crossed. Okay. So again, I want everything to line up together, but really this is just to give me a caution. Hey, caution. This might not be ready. Caution. So that's the only reason I'm looking at that, is to say, well, is this gung ho, or is this ready to go? Well, it's telling me that that it's starting to lose some steam, but I can already see that. But overall, the trend looks really good, doesn't it? So bullish opportunity. Moving right along, BAC. Okay, let's take a look here. Are we above all 3 moving averages? Yes, we are. And we broke right above it right here. We broke right above it right here, and we stayed above it the entire time. So we're making higher highs, higher lows. Our MACD is still moving up. We haven't seen a divergence yet, so that looks good. Tony, what do the MACD 8 and 17 lines represent? So this is just an input setting. The default is I think it's 12. So this is just the number of days, okay? Number of days, 8, 17, 9. Now, you can learn about the indicator and exactly how they put all the algorithms together. But how we are using this is what I've been doing, is we simply look to see if there might be an indication that trend is shifting, that we're getting a divergence in trend, that maybe we're getting ready for a change of direction. So that's all we're looking for. Is there a divergence? Is there a change of direction happening? A buy signal, sell signal. But these represent time, okay? And fast length, slow length. And like I said, to understand more about that indicator, you just simply go to MACD and you click on the question mark, and it's got a whole plethora of information, really good stuff here. And it actually tells you the mathematician, how they put everything together. So if you want to read up on that, but all you need to know is how we use it, is what I've been saying. Does that answer your question? Good, thanks. Okay, let's move right along here. I'm going to do just one more because you guys get the idea that this is how we look for stocks that maybe haven't been on our list, right? So, I was talking to a couple people. How do we find things? This is going to be part of our process. Where do we find stocks? We have all these stocks in our mind that we're familiar with, which is good. You should trade stocks that you're familiar with. You're familiar with Wells Fargo. You're familiar with Southwest. You are familiar with some of the cannabis stocks. You're familiar with the cruise lines. You're familiar with all these things because you use them, or you're interested in them, or whatever it might be. But eventually you're going to run into situations where, even though you're familiar with it, it's no good. And we're gonna look at some of the reasons why a lot of stocks out there are no good right now, which plays into this whole bias of should we be completely all in? Should we be buying and going all in blue chips, right? Should we be doing that? And the answer is no. We should definitely be looking for opportunities, but we should be cautious and see which ones are going to give us the best probabilities of success. So just to finish off with how we use this, Wells Fargo just today closed above the 200 moving average. That is very bullish. Anytime you get price action to cross above a very long-term channel like this right here, trend line, that's a very bullish indicator, right? Because it's been sitting below it since January 14th of this year. So almost a full year it has been below the 200 moving average. Today it crossed and closed. And we've got other signals here too. It broke above this resistance area. A lot of bullish signs. Okay. The only thing that I would look at this when I'm doing a quick glance is it hasn't been really making highs and lows. It's really just been making highs, right? So that's one thing that I might think, okay, I'm going to be a little cautious about maybe buying at a certain level, or so on and so forth. Okay. But overall, I look at this, I do a quick glance. I've got highs above all 3 moving averages, and I don't have any divergence in my MACD. So I can go ahead and put that on my list, that this is a stock I should look at for a potential bullish situation, or buying it. So what I was going to bring up was, probably wrote it down here to help me remember. Hmm. Yeah, the spreads. Okay, so guys, wrapping it or bringing it all together. The spreads right now are a really good indication that markets are all over the place in volatility. It might not show it, but this is how you know. See, all of the people out there that are watching MSNBC, they're on Yahoo Finance, the chatter of the street, you know, all of those people, they're just seeing highs. They're seeing it go higher and higher and higher, right? Everything looks good. Everything's great. Well, what's actually happening in the market? Yeah, you're seeing price go higher, but what's going on in between? What's in the gray area? What's in between the lines? Well, I'm going to pull up some of the giants here as an example, and this will really open your eyes, because this is one of the reasons that we don't actually have a lot of opportunities right now. So this is just Google. Okay, it's one of the FANG stocks. Trades on average over 1 million shares. It's got a market cap of, I don't know, 750 billion. So it's a big player, right? We all know that. But look at this. This is the thing that you need to write down and notate. Anytime you're looking at an option, anytime, or you're looking to buy the stock, pay attention to this. Every time you're either looking to go long on a stock and hold it, or especially when you're looking at options, what's the spread doing? Meaning, what's happening between the bid and the ask price? So typically, we want small spreads. So I need to show you one before I show you the other. So I think Delta has got small spreads. Yeah, it's decent. Okay. So take a look at the spreads. My spread right now is just single orders, right? So this is just buying and selling options. No verticals, no other strategy. So just buy an option, buy a call, sell a call. That's it. So we can see right here the spread between these two right here. That's interesting. So on this particular one, you can see that it's 1090 and 1115. So we've got a 25-cent spread. That's very easy to work with. There's some fundamental rules that we're going to learn along the way. And one of them is we want to try and keep that spread under 50 cents if possible. We want to do that. When we see the spreads higher than that, that's where things can get very hairy. You will have a hard time getting out of trades. Even if a trade is going with you, you might find that you're up in the trade, and when you try and get out of it, because the spread, the bid and the ask, maybe like you want them to be about here, but maybe they're up here, then you might actually lose money. It happens all the time. So on this one, this looks good. Let's go back to Google. Look at the spreads here. Okay, this is not because the stock is not traded actively in options. It is. It very much is. And we've got 36.10 to 38.90. That's the at the money option, okay? At the money option. Not out of the money, not in the money, the at the money option, right? 36.10 to 39. What's it trading at right now? Okay, 18.21. What does the bid and the ask price say up here? 18.21 to sell it, bid meaning sell, to 18.27 to buy it. That is a huge difference, my friends. That is a big gap in the spread between the bid and the ask. And it's reflected right here. So this is where you come into the problem when you try and get out, because that gap is so big right now. So let's take a look at another one. I made a list. There it is. Netflix. This is an option trade that we did a while ago. I don't know if anybody got into it. I hope you did, because it's going well. Okay, So taking a look at the spreads on this one, not as big as Google. Those were huge, but still fairly large. We've got 65-cent spread. Remember, we want to see it under. We want to see it 50 and under. That tells us the volatility is down. So take some notes on this. Take this one to the bank. Spreads being low are important for exiting trades. When you have big spreads, it's hard for you to get out of trades with while still profiting, right? Because when things open, you can have your sell option, your sell put and your short put and your long put. It could be like this. So trying to make that profit when you close it, it can just smash your profits very easily. So that's the takeaway here is even if we're not trading Netflix or Google, doesn't matter. We can see that the majors out there are seeing a lot of volatility in their spreads. Let's go to Zoom. This one was huge. Zoom is not necessarily in the FANG or a major by any means, but let's take a look at it. The bid is 2050. This is the at the money, right? The bid is 2050, and the ask is 22. That's $1.50 spread. That's huge. That's big. Let's take a look at the verticals. This is where we spend some of our time, right? That's the problem right there. I didn't bring this up before because I want to make sure you understand, and I want to make sure you still understand. Any questions on this? Are you all following along with spreads, meaning 50 cents and higher? No bueno, not good. We all following along with that? So I want to make sure you do understand that, because when I look at a vertical, it doesn't really matter what strategy I'm looking at. As if I start off with just single orders, buying a call, selling a call, and I see right off the bat that that the spreads are far greater than 50 cents, that's a problem. Okay. And I can't trade these, period. Like I won't touch them, right? And if we take a look at the Greeks, which we haven't spent a lot of time doing, and we will, we have our theta, which is all about time decay, is very high, and I'll talk about that later. But keeping with the volume, the open interest, this just tells us how many people are trading these, and it looks good. So traders are still actively jumping into these. But if I could have showed you what they looked like when things started settling down, or especially what it looked like prior to COVID, these numbers were much higher. So there's not a lot of people, institutions are not buying as many options as they normally would. Okay. So that's something that we can think about right there. So there's Zoom. That tells us that we can't do a lot with that. Let's look at Square. I brought up Square last time, and I wanted to trade this. It still could be a good opportunity to just buy a put on it. Now, like I mentioned to you before, I'm not a big fan of buying options, but that doesn't mean I won't do it. It just has to be a very compelling reason for me to want to take on that risk of being extra right. That is the whole reason we do these spreads, these verticals, because there's so much more forgiveness in the trade, meaning it doesn't go out the way you thought it would. The time decay is not going to eat you alive. If you end up having to own the stock, you can sell some calls on it, make some premiums. There's lots of different strategies in a vertical versus buying options, right? So anyways, getting back to the point here, on the vertical, one more time, look at how big they are. Oh, this is the one I was going to do. That's right. I was going to do a long put spread. A long put spread. Now, if I had done it, it actually would have gone in my favor, because I think I was looking at there it is. I was looking at the 210, 212. So it's going well had I done it. But this is a problem. That's a huge spread. Remember, we don't want to see spreads. We don't even want to see spreads at 50. We want to see them within a quarter, 40 cents, something like that. So when you got a spread that's over $1.50, roughly, you can't touch that. So we have a lot of trades that we can look at, a lot of stocks, and we have to be cautious, even though it's a good, it seems like it's a good chart. Let's bring up that chart real quick. Even though it's a good chart, I still like this. I may have to adjust my strategy. I'm definitely not going to trade a vertical on it. Absolutely not. I might just buy a put on it because it's much more forgiving. I do have to be a lot more right, though. That's the only issue with that. And it's very expensive. It's going to cost me $1,000 for one contract. So a lot of pros and cons, which I was going to go into. I'm going to do that next week. So are you guys with me on all this? What's going on in the market right now? And more importantly, these are foundational rules that you need to apply. I hope you all wrote them down. Big spreads, not good. We want to see short spreads, right? Okay. Okay, so we went through quite a bit today. We went through quite a bit. What I'm going to do is go into my 7-step process. So this is a process that we're going to start implementing every time we get together. Maybe not each time, but at least once a week. Okay, and we'll always change up things so that we can so that you guys are always learning different things that will enhance your skill levels and things like that. There's a plethora of things that I can show you, but we want to have a system. We want to have a strategy. We want to have rules. And so we're going to start going through this 7-step process. I'm going to wrap it up over here. And here it is right here. There's not much information to it other than this is what we're doing. Okay. So this is something that these are processes that I'm going to go over in detail that are going to be your foundation of when you look for trading opportunities, and how you follow them and keep track of them. All of this is going to be essential to your success. You need to have a trading journal. You need to have a documentation. I have one for the group that I'm tracking all of our trades. I haven't sent it out in a little bit. I need to update it and send it out. But these are things that will make you be a successful trader. These are the things that are going to separate you from all the other people out there. Those people that claim to be making 1,000% a day and they'll give you stock ideas. They never tell you how the trade's going. Hey, are we going to manage that trade? No, we're on to the next one. So you have to do these things. We're going to do these things. We're managing them, but we're going to have a process that we're going to follow. So this is what we're going to do next time. So I'm looking forward to that. Any questions about any of the stuff that I covered today? And while you guys are thinking about that, I'm going to pause the recording here.